From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 16, 2018. Today we're going to take a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Starting here on the daily time frame, the area at the very top of the chart, 73.80 up to 0.7405, that's the orange shaded area at the top of the chart, is what we want to pay attention to today. The market is challenging a significant resistance area, and it's not too hard to see here on the chart that we've seen the market challenge this area before and fall off of it. Just recently, we've seen these two blue circles where the market came up into this area, found resistance, couldn't break through the 7,400 or sustain a hold above 7,400, turned around and went back down into the 7,200s. Far left-hand side of the chart, black circle shows another period when the market came up into the 7,400 level, the orange shaded area, unable to sustain a breakout above there, and became a significant reversal point, moving all the way back down into the 6,800 level. So we know with some fact, statistical fact, that this orange zone right around 7,400 is a significant decision point for the market. A decision point, sure, we call it resistance, but the decisions by the market makers, the people that are causing the market to move bullish or bearish, up or down, are making a decision right around this area, or historically since September have made the decision to exit the buys and enter sells. So if the market makers, the people causing market movement, are doing that around this area, smaller traders and individual investors may look to do something similar if we see indications of that resistance and reversal again from this orange shaded area. Now, it doesn't have to happen like that. Market could break through here and continue the upside pressure that we've seen over recent days, but we know that this orange zone is where that significant decision will be made. Either break it, continue higher, or bounce off it and turn around and go back down, because history shows that's what happens around this area. Let's go ahead and zoom it in a couple of times. And so in the most recent days, again, we've seen that challenge of this level around 74.05, 73.80. Look at even yesterday, trying to close above it, and then today turning right back inside that orange zone. So we haven't seen a breakout yet, a successful breakout above that orange zone. So if it's not a successful breakout, there may be evidence of a successful reversal. And if it does, obviously we know where the market's going to go. That's this pink zone down here, 73.30. Just look back here to the left. The black box right here shows us under the blue circles that if it falls off the orange zone, at minimum, it goes back down to the pink zone. Of course, if it breaks the pink zone, lower levels will be reached. And if it breaks above, we've looked back in history, where does it go? If it does successfully get above 7,400, the 74.50, 70 level, the green shaded area at the very top of the chart, becomes our next boundary of potential resistance into that green shaded area. So we're looking at this orange zone for a decision. Either it breaks it to go higher, reverses to go lower. Let's go ahead and take it on down to the 4-hour time frame and see what this looks down here on the 4-hour. Now, here on the 4-hour, we do see a little bit of a change, don't we? Let me zoom out one more time. Take a look back there. There's those circles again. They change shape when I change to time frame, but there's those circled areas again that we just looked at on the daily. Take a note here. We don't see either time the market having a significant breakout. It's challenged it, it tested it, it's peaked its head above, and then got right back down underneath. What's the difference today? The difference today is we've actually seen the market hold and stay above for at least a 4-hour period, that one little blue candle there above the 7,400 level. So it was successful, at least here on the 4-hour, to stay above it. So again, I think there's still the possibility that we stay above the orange zone and may even make another rally to the green shaded area. I'm going to have a little bit more confidence in that once we see the daily stay above that orange zone, because literally, if the daily becomes a false breakout, this becomes a significant bearish move. You know, if by the end of day today, I'll just draw it out as a more of a bearish looking candle here. If by the end of day today we see a large red candle and it's back underneath the orange zone 73.80, then we may be looking for that turn back down. But as long as it stays above as it has right now, 7,400, there's this potential that it continues to rally. Now, we do have some news, 8:30 a.m. Eastern U.S. time, about 30 minutes from the recording of this video out of the U.S. Let's watch and see what that news is. If it's positive news, we may see a little bit of a bump lower, back to 73.80. If it gets back underneath the orange zone, I think we're looking for it back to the pink shaded area and a turn back down into the 73s. If it's negative news for the U.S., maybe a bump off of this orange zone, targeting back to the green zone today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.